Hey everybody, Caleb here with the day team at Cornerstone Home Lending, and I want to walk you through what we've been going through with a lot of our clients who are looking at buying a home in the near future. Well, the big news, as we know right now, is the conflict in Iran, and mortgage interest rates have heavily relied upon whether or not there is a foreseeable conclusion to this conflict. As you can see over the course of the past 2.5 months, dating back all the way to the start of this war, as the news reports that there's a conclusion on the horizon, mortgage interest rates go down. And as the news reports that a the conflict may or may not be coming to an end, mortgage interest rates rise up. You can see specifically in the month of May, we have had, depending on any given day, yes, there's going to be a resolution of the conflict, or no, those peace talks are gone. With all of that volatility, what we are experiencing with our clients is their openness to other strategies other than 30-year fixed rate mortgages. What you see on your screen here now are two different fixed 30-year fixed rate buy down strategies. Okay, well, what you're looking at again is on strategy number one, which is that middle column. Okay, you see a $10,000 increase in the buyer's closing costs to get back down to that original 5.99% interest rate, which is where 30-year fixed rate mortgages were when the conflict in Iran started. Okay. If you look at the more aggressive option, that's increasing your interest rate by a further $15,000, your closing cost by a further $15,000, just to get, again, an additional 0.5% lower on that 30-year fixed rate mortgages. We're talking with clients right now, a lot of them are hesitant to invest that type of cost for only a 1% improvement in their interest rate. And what we are seeing with clients is their openness to discussing other options, specifically adjustable rate mortgages. What you see here now on your screen is more or less the exact same cost, that we looked at on the previous screen. And you can now see the extreme nature on which your mortgage interest rate can get that much lower on an adjustable rate mortgage. When you're looking at option number one, your interest rate, when on a 30-year fixed rate for the exact same cost, is now not 5.99%, but it's 5.375%. And with option number two, okay, the buy down number two, for again, that same cost on a 30-year fixed rate mortgage that got you 5.5%, you're now at 4.125%. Okay. These examples are things that we are looking at with our clients who are currently under contract and have a close date in the near future. A lot of our clients are heavily considering these options for a variety of reasons. One, these adjustable rate mortgages are very appetizing right now. The sheer difference in terms of what a discount point will get you, especially as you increase the amount of points that you're buying, heavily goes in favor of adjustable rate mortgages. What mortgage companies right now are saying is if you're willing to take on the risk of an adjustable rate mortgage, which again is fixed for a 7-year period on the 7/6 arm, then we'll give you an outsized premium when it comes to lowering your interest rate. Okay, these are all conventional conforming options, both the 30-year fixed and the 7/6 adjustable rate mortgage. As you slide over to jumbo options, the amount of options actually opens up. Okay, what you're seeing here is that the current market, those jumbo outlets, they're sitting right around where conventional mortgages are right now at 6.6%. Okay, for the similar cost that what we were looking at with the buy down option on a 30-year fixed rate mortgage, okay, you're dropping your interest rate down into the high 5% on a 30-year fixed rate mortgage. But if you look at those middle two columns, the 7/6 arm and the fixed buy down, okay, look at the cash to close and look at the monthly payment or the monthly savings line. Either one, you can see for similar costs or for less costs on an adjustable rate mortgage, you are getting an outsized benefit when it comes to your monthly mortgage payment. And then finally, all the way on the right hand, what you're seeing there is the Cornerstone Rate Buster program. This is exclusive to Cornerstone Home Lending, specifically for our jumbo options. What you're seeing there is a 1% reduction in your interest rate for the first year that you own this home loan on a Cornerstone home loan program. Okay. So these are just a handful of different options and routes that we're going over with our clients as we are trying to help them pivot in this new interest rate environment due to the conflict in Iran. If you have questions on any of these, you can always reach out to us, team@dayteamlending.com, and we can go through a customized option that shows you what it looks like in your specific scenario. Finally, what is moving the markets? Well, we've already covered a little bit. It is primarily the conflict in Iran and it is the cost of oil. Okay. Well, the cost of oil trickled down to all of the options that you are, all of the things that you see below. The cost of oil heavily weighs on the expectations of what the Federal Reserve is going to do. In the month of April, they left the month of May, they left the federal funds rate alone, citing uncertainty about inflation due to the rising costs of oil. Okay. Down below that, you see the rate of inflation. That's the personal consumption expenditure. If you look at the headline number, boy, that headline number, which factors in uh, the cost of oil and the cost of energy, well, that shot up by 0.7%. Okay, but if you take that out, even still, the rate of inflation was still increasing by 0.3%. Okay, both of those were actually expected, and so they didn't damage mortgage interest rates as you might think. Finally, what we saw last Friday was the BLS jobs report, which came in hot. Okay, but last Friday we saw mortgage interest rates improve because there was optimism around peace talks on the war in Iran. Again, this all trickles back to the oil and to the war and whether or not it's going to come to an end. Okay. On our CPI or Consumer Price Index, what you're seeing there is the expectations. Sorry, that should say February 12th. The expectation on the CPI is that it is going to rise from 2.6% for 2.7% for that core reading, which is, again, strips out the cost of energy. So, until we see a meaningful resolution, a long-lasting resolution on this conflict in Iran, that is going to drive the mortgage interest rates. And so, if you have questions on whether or not you should be pivoting in terms of the traditional mortgage options available to you, you can always reach out to us and we will go over a custom loan analysis for your specific situation. My information is there along with where you can follow me on Instagram. That is my business partner's information. That's Kerry Day. Both of our information on the screen for you. You can reach out at any time and we would be happy to talk with you about the different options available to you. I hope you have a wonderful rest of your day and we will talk to you soon.